Hi everyone, welcome to our next video in the 8 trading course. So in this video, we will really be going over all of our areas within the candles and how candles form and how price is delivered. So you've heard me mention order flow earlier in the course. And all that is again, higher time frame, bearishness targeting liquidity pools, and then higher time frame bullishness. And then just like the pullback, if this is a monthly buy, overall order flow is bullish, but current order flow on the daily would be bearish. So order flow is just which way the market is essentially trending or if it's accumulating. Now, FU Wicks. So this all goes in hand with how price is delivered and us building an area narrative, but this is going to really be how we start reading the candles and getting in on those moves. So an FU Wicks. So this goes in hand with structure, timing, and everything we built. So an FU Wick, usually we'll have our Asian range. London open will occur, right? So we have that false move down. You'll have that candle and move up. It'll leave a wick. That clears everything. And the reason they call it an FU wick, because it's like that wick that's like leaving all those traders trapped there. Then you'll have that candle close, and then price will break structure, and that it'll leave that wick, hit the block, and continue down. And this is usually at London open. Now, and the market structure is key. Remember what we've been going over with internal liquidity and external liquidity. So you have fake breaks of structure, which are better known as inducements on liquidity. So you have a break in structure, right? Price will come down. It'll fail to break the structural point, but then it will fail to break this low. So then price will come up. And what do you get? This is a fake break in structure because this move is not valid. So what this really is a run on liquidity, and then you wait for price to create the move. That is a fake break in structure when price plays off a move that never broke structure and it runs liquidity, and then you wonder why the market reverses. That is why. And then we'll go ahead and get into our smart money traps, which is this, because a lot of traders will buy off this order block thinking it's valid. A lot of retail traders will see trend line and a double bottom. So those are two types of traps with trading with a no break of structure, which is here, and then a fake break that follows after. Usually this will be Asia. This will lead into that FU wick, and then you'll get the real move, which is overall order flow, because this more than likely will be that pullback. And it all goes hand in hand with our cycles. So when you get your fake break of structure and no break of structure, so the fake break of structure is the move that played off the fake one. Usually this is your Asian range, London open. And then this is what induces that trap, because people think price is going to pull back and fly, but your inducement comes within the trap and then the move occurs. Now let me show you what that looks like if we really dissect the chart. So again, go ahead and pull our higher time frame. So this is a perfect example on gold. What do we see on gold? Overall order flow is what? Bearish, right? The market is trending down, still trending down, but current order flow has been bullish because we had that strong break in structure and then another break to the upside, even though this week is bearish because we're playing off a block. So we have bearish order flow, bullish order flow, and then current bearish, identifying our zones. So again, we just want to mark up our daily and know that we're in this week and our strong zones. So we have our external point of liquidity that hasn't been met yet, right? With our equal lows, just equal lows and lower high, meaning price never ran under this low. And then we have our form of external liquidity on the top because this is our range on the daily. But then we have that internal range that was cleared. So this is also why we're getting reversals. We cleared internal liquidity, and we also came into what? Clean move down, no liquidity. We have that breaker block. We have a breaker, right? Now coming into that range, what I would like to more than likely see is a run on liquidity lower to go high, then to clear this high. So again, we'll identify that point of the range. And now we'll start to build in all of our narratives. We identified order flow, and now we'll go down and look for our current trading week. So now we'll go to our 4 hour, and how we could have built in this narrative. And then we'll also identify the narratives in here. So the whole buys that led up. So as you can see here, again, this took a point of liquidity and broke structure. So this is that last liquidity point, right? And then we have that next point because you have this new range. You have this range that broke structure. So this was that. This is what was the validation for us, right? Again, broke up, broke down, up, failed to break. So this is a perfect example of a trap. While people would be looking to sell here because you have the run on liquidity to go lower, this was a validated structural break because of how price reacted to it and how then it reacted off this block to give valid buys. So this is a perfect example of our trap with inducement and then a fake break of structure and no break of structure. So we'll go ahead and identify that on the lower time frame after we go ahead and take a look at everything else, which again, this was validated. Here we have another trap, which is why liquidity ran under, but again, order flow was bullish, so that's why it didn't keep going lower. And this was a valid order block. So identify that. And then we have a range up here, a range here, and here. And also, this is what, again, that internal range of liquidity. As you can see on the daily, this is where the move occurred. This move down, and this goes hand in hand with smaller timeframes. This move down did not break structure. So we need to run liquidity in order to go lower. That is why reversals did not occur anywhere in here. But once we ran out that external point of this internal range, and it came into a valid point that broke structure. So that is extremely, extremely important. All buys should be occurring here. Why? Because the first push up was that break in bullish structure. We came down, we failed to break a low. So in order to go lower, we have to pull liquidity on the higher point to go lower. So again, following off those major structural points, it ties back to our recent videos with weak lows, weak highs, strong lows. All right. So now we're going to start looking for all our FU wicks, our inducements, our break of structure, our fake breaks of structures, and our traps on our actual trading areas. So going into the 4 hour, I want to depict the whole move from the buy to the sell, and how we could have traded this entire move from the buys all the way to the sells. So again, identifying our areas on the daily. This is what we can see. So as far as retail traps go, this is what I see as opposed to smart money. So again, as I mentioned in the very first video in this course, retailers would buy off the trend line, they would stop out, they look for the retest of the trend line, and what would happen, they would never get it, or they'd see that as a channel and they would look to keep buying because that'd be a flag of some sort. Again, same ideology if they dragged any fib to get a fib extension buy or support resistance, or they wouldn't even trade this because they say it's consolidation. Same thing with this, same thing with the trend lines, right? Again, when you get the retest, just be stopped out and so forth, so on. I'm not 100% because I don't really, I haven't traded this way. Again, the channels always get broken. Now let's dive deeper into how we trade, right? Identifying how these moves really occurred with tying everything together. So again, we want to keep in mind, right? We want to keep in mind order flow, inducement, which is better known as our liquidity inducement, no break of structure, fake break of structure, and our traps, which is also inducements. We don't need to do that. And then our FU wicks, right? FU wick, just take liquidity and form it. Like this is a FU wick, this is an FU wick. So we'll get into that. So again, here, what do we see? This was the rundown. So this I'm looking to be ran out later. Again, it gave confirmation here, but this pushed up took internal liquidity, and I was looking for this low to be ran out because this is not a structural point, but the market made us move up. So this is a successful run on liquidity and a breaker structure. So automatically, what am I looking for? To trade into the breaker, take out an internal point, and I'm looking for sells. Now, this is where sells were not confirmed. We get the run up, break down, then we get the run up again. So this invalidated sells for me. Why? Because we also have to look at the timing. So this was London and this was coming into the end of New York the next day. So this was Asia session. We wouldn't have even taken this because this is Asia high and we're looking for Asia high to be taken out, right? So that's how we get saved. So this was the Asian range. Asian range was liquidated. We came into the order block. Boom. So right here is where how you know you wouldn't get taken out. Failed to break a low, right? Boom. Was there any high taken? Yeah, it took internal liquidity here and then moved down. But again, we wouldn't look for sells until we came into the unmitigated order. We wouldn't take this block. And this isn't really structured. This is just a form of internal liquidity. But again, failed to break a low, failed to break a high, where they're going to take external liquidity. And order flow has switched to being bullish. So again, there's our valid swipe. Here's an actual structure point, created a high, created low. So this is a valid breaking structure, right? Oops. Again, pull up, down, no structure is broken. You don't get the second confirmation. What are we looking to buy off of? Our FU. So this is our FU wick. This is London open, right? Took liquidity, move up structure. We have our breaker, right? And now we're going to look how price reacts. So this buy for me was not valid, and that's why price came down and took this out. But also no sells are valid. Why? Because no structure to the downside is being broken on the structure to the upside. So again, even though we take out that internal point of liquidity, it doesn't break. So this is better known as a smart money trap. It takes liquidity, but there's no break. So this is a smart money trap, no break of structure and a fake break of structure, which is why this move did not respect and why it came down and took out this low. So I'm already looking for this to be taken out to look for buys, right? So we have that. And now we're just waiting. Again, time price, this is Asia session. London open is right here. That's that Asia low. So we wouldn't look to buy off this. You're looking at buy, break of structure. That's not structure. That's a run on internal liquidity to go lower. So, but the thing is, price is not going lower because this whole push was not validated. Again, here's New York open, minor break in structure. So I need another break to confirm it. This is not valid. So again, because we're coming off of this minor break of structure. This is a false order block. Again, you're trading with no BOS here. And then you have the fake BOS here. So you have all the inducements and the traps. So you have to wait for structure to be confirmed and run on liquidity to be validated. External liquidity ran, external liquidity ran. Now what are we waiting? Internal, internal. Boom. There's your valid breaking structure. These down candles were that inducement trap, right? So there's your internal point, because that run up was not validated. That's why I didn't play off this block or this supply demand zone. Here's your run down. Now, how do we catch this entry? This is your imbalance. So we're going to take the breaker to the top of the candles. There's our entry. And also, how is this a valid entry? This is New York open. This is London. This is New York. And then that was the previous New York day. So all this is validated. You can see how structure has shifted. You could have took sells in here, but again, they would have only been taken to this unmitigated order. So the sells were very choppy, and this is what gave you the cleanest entry for those buys. Again, then price comes up, right? Remember what I said? This was not validated. That's why this was taken out. So this is a trap. So even though price reacted off of this is fake. This is inducement. This is not a brick of structure. This is a false order block. So here's your smart money trap. And now where are we looking to come under? All this internal liquidity that never created structure. And we're respecting our what? our FU wick. So we don't take that out. We play off of it. We take out internal liquidity. Here was your second entry. And guess what? 9 o'clock. This is New York Open. So you have two clean entries that played off of validation because this was just a reaccumulation. No structure to the downside was formed. Even if you would have been caught in sales here, your bias would have flipped. Now, going in, so when price came down, again, no new structure was formed here. Price didn't validate it at all. Here's our what? Our FU wick, because this is New York Open that broke structure. So this wick cannot be taken out. So there's that FU wick. This is a valid order block, right? Took liquidity, broke up. Now when price is coming down, what do? We try to play off of it. New York Open, no structure was broken. When we took liquidity, no structure was validated again. So that's our smart money trap. That's our inducement. We come down. We respect the wick. Now I'm looking already. This move I would not have taken. I would have taken it when it come back to here off the breaker. This push did not break any form of structure. So I'm already looking for this low to be taken out, but for it to respect these wicks. So no breaking structure, but price comes up, it failed to break down. So that's why these buys were valid. So you always have to look at liquidity, right? Run on internal, didn't break structure. So I'm already identifying this breaker to buy off of to run out where no structure was formed. So I'm already looking for that to be ran out. But again, what do we need for this move to be validated? There's no liquidity form, no break of structure. This is not valid. This validated it. So right here would have been our entry again. Let's see. Yeah, so right after New York. So never mind, would not have taken this because no entry, but we see how it's playing off our breaker, right? Our breaker's right here, the last three candles within that range. Before the up candle, we wouldn't take the block. Breaks a high. You can see all that left mitigation. So I'm already looking for a sweep up and breakdown to sell because we're already see the slowdown in momentum in the final move up to induce. Wouldn't take sells here again. No breaking structure. This is that FU wick at New York Open, and they conform in London too. So you could have actually took buys off of that as well, coming into New York the next day. Now, why would you not take buys off of here? Because we ran external liquidity. Also, there's no valid order block here. No liquidity was taken, no structure was formed. So we're looking at all these, honestly, this whole range from this low point to here is traps. It's inducement. Right? So we're looking for all this to be ran out because there's no structure. This is that building of liquidity, right? You have your FU wicks, you have them here, you have a clean FU wick here, and order flows on the higher time frames bearish, but current order flow was bullish, right? We have our fake breaks in structure, we have our inducements on liquidity, and our traps. So again, this move down for me is not a break in structure, so I'm not looking to sell. This is more so a valid BFI footprint. So again, what am I looking at? This order block. Why am I not looking at the breaker? Because there is no low that was broken. I'm looking to see if this is going to be a validated order block. So we come in. Again, remember I'm targeting this low because it did not break this high, but this took liquidity and broke a high. So we're targeting this wick. What we went over in our previous is the 50%. Yep. I want to look at that mean threshold of that 50%. See where this lines up. Ooh, you can see the accuracy. I'm looking for this low to be ran out too because no breaking structure, but again, it played off. So again, coming into these cells, this is where we get validation. I would look for that high already to be ran because it broke no structure. The whole move broke structure, right? So that's valid, and the move up didn't. So here's another trap. So this is a trap. So the move up is already not valid, and we're going to get sells. But because no structure was broken here, and you just had this ugly move down there, I'm going to look for this high to be ran to validate sells. So again, clean, you finally get valid breaks in structure. Sorry, right? So boom, you get your valid break and structure. Again, New York open. Here's your FU Wicks. Price pulls back. Now, where would my entries be? Wouldn't be in anywhere. In here, we'll go to a smaller time frame to really clean up price. So right here, since this is New York open, when price pulled back, I'd enter right off that order block. If you want a cleaner, more conservative entry, make that a little more clear. Right? A cleaner, more conservative entry, you would have waited for the full-on break here. And now this is where people can get tricked out. Where is the last up candle before the down move? It's right here, right? Perfect. Because none of these form the low. You got to take the whole leg. So when price came up, it hit that, and this happened during London session, but my entry would have been here in New York. Again, price comes down, and where are we targeting on a higher time frame? That original low that did not break structure. So this whole pullback was just to induce. Finally, and then even here, you can see how we get that fake. Remember how this happened in Asia? This is why price did not respect it, right? The breaker. Price did not respect it because I was in Asia and this wasn't valid because it's playing off this. So you have a fake break of structure. So this was just used to induce as well. No structure is formed here. You have your liquidity buildup. We're looking at our breaker. So we have our breaker, right? Price doesn't break structure. And this is also Asia session, so you wouldn't take that. London open. We liquidate. You get a full-on break of structure. Here's your FU wick that leaves. Come in, right? Breaks. Where does that wick pull back into? The order block. You can take the whole zone and put your stop above. Price comes in, validates that. Now we're looking for this to be ran out later. But again, we have the buys that occur. We lead into what? That daily level. And then in the previous video, we went over this whole area, which again, it happens time in and time out. Right? Here's your traps. No high broken, no low broken, no high broken, sweep on liquidity, clear internal. We have to see how it reacts to go up, but this is a fake order block. No structures formed, so it respects this order block. And what do you get? Your first break, your second break. Price comes down, you get your third break. But remember that it's playing off that fake block here, right? Because that's not structure. So we're looking for what to be taken, that last high on liquidity, which is right there, right? Boom. Last up candle before the down move. That's mitigated. There's your clean entry. And where are we going to sell to? This is one that I would still be holding and that I am still holding, which is where? Down to that low. And you can see how price is completely melting, taking out each one of these weak lows. So again, I hope that helps and really clears a lot of things up with our breaks and our fake outs and everything, so we can really see clearly how it goes with liquidity and structure. And I hope to see you guys in the next one where we will start tying everything together.